Welcome to the video that's going to change your trading forever. This video is going to be all about the market maker, a revolutionary trading tool that's going to change the way you see the market. You can trade this on any market, stocks, options, futures, forex, crypto, it doesn't matter, you can trade it. You can also use this with any trading style you want. If you want to scalp, hold longer for a day trade, hold even longer for a swing trade, it doesn't matter, you can also trade those styles. You can also use any time frame you want, whether it's the 5 second, the 1 minute, the 5 minute, the 1 hour, the 1 day, it doesn't matter, you can use any time frame. Now there's a few different main features of this tool, but the real money maker is right here. I promise you these will be the most accurate automated levels that you will ever find. Now I know you've probably looked for tools or indicators before that can help your trading, but they all probably led to a dead end. 99% of free indicators are all lagging and don't give you accurate price data. And when it comes to paid indicators, it's even worse. A lot of people just throw together EMA crosses with buy and sell signals and tell you that it's going to miraculously turn you profitable. But with the market maker, it's completely different. This is the first tool that actually uses how the market works to your advantage. The market moves from two main factors. Number one, buyers and sellers and large participants in the market that are moving price with volume. And with these same big players and buyers and sellers, you're going to see orders being left behind in the market. You've probably heard of the term liquidity. You might use it in your strategy right now, but that is one of the ways that the market works. That's where number two comes in. The market is also moving algorithmically. You're going to have buyers and sellers pushing price, but with these orders that are left behind, there has to be a balance in the market. So that algorithm is going to seek out that liquidity or seek out those orders to fill. So whenever there's not a balance in the market, you're going to see price seek out these large orders in order to balance the market again. And these are the things that the market maker uses. You're going to get these key levels, which are the most accurate automated levels you're ever going to see, because it uses a combination of factors that you can't see on a normal candlestick chart. It's going to calculate volume, orders in the market, hidden participants with passive buyers, passive sellers, aggressive buyers, and aggressive sellers. And it's going to pinpoint these areas in the market and give you these automated levels. I promise you there is no tool like this. In this video, I'm going to first cover each major feature of this tool, including the one I just showed you. And then after that, I'm going to show you my personal approach using this tool to trade the market and my entire strategy. Now, I live trade every single day inside of the Discord using the same exact strategy. I recorded today's trade, and that's the example you're going to see right after I talk about my strategy. Then I'm going to invite two members from inside the Discord who have taken the market maker, the same tool, paired it with their own style of trading in the market, and have found so much success with it. You can even pause the video and see all their success right here. First off, we're going to have Tony talk to us about how he uses the market maker to scalp futures, along with his approach to risk management, which helps him to stay in trades longer and avoid getting stopped out too early. Then after that, he's going to share with us his insane crypto strategy using the market maker. Next up, we got Kelvvo. He's going to be sharing with us his scalping strategy using the market maker as well, and then his approach using the market maker so he can catch multiple take profit levels using higher time frames and lower time frames together. So if you're as excited as I am, let's get right into it. So first we're going to start off with the dashboard. Okay, so there's three separate components of this dashboard. Okay, you have your flow, you have your kind of your trade management assistant, your TPSL, and then you have volume. Okay, now flow, what this is going to do is going to aggregate some order flow data, some volume, and structure as well within the market to give you an idea as to if the market is leaning bullish or leaning bearish. Does this mean that whenever it says bullish, take longs? Does that mean whenever it says bearish, take shorts? No, it does not. It's just giving you an idea as to what side of the market, if you find an entry on that side of the market, right, you can have some additional confluence, right? Your TP or SL, what this is going to do is, based off of previous price action, is going to give you an idea as to where your TP can be set, how many points away from your entry. Okay, now this doesn't mean that you randomly enter shorts and set your TP at 4 points and it's magically going to hit. No. What this is going to help you do is, just like you would take a normal entry, right? Whatever your, let's say your TP, your normal TP is at, it's at 4 points right now because we're low volume, we're consolidating, right? This is where it's going to help you, right? Because a lot of people, let's say you're on NQ, a lot of people will set their TP at 10 points or 10-point intervals, right? Can you do that in an area of low volume? No, you cannot. You can, if you want to, go right ahead. But it's going to take you about a year for you to hit that TP, okay? It's going to take you about a year to do that. Not really, but y'all get the idea. In an area of low volume, you obviously have to adjust your TP. Well, you're asking yourself now, well, where should I set it? This is what's going to help you, okay? Now, you know, if you get a right entry, right? Like I said, this is not telling you go short, go long, set your TP at 4 points, and you're going to be rich. No, this is when you find an entry that aligns with your bias, with your sentiment, this is going to tell you that you have a higher probability, if your entry is correct, of it hitting that 4-point TP in comparison to, let's say you have like a normal 15-point TP, blah, 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 or 9-point or whatever, right? In a low volume environment, that's not going to fly, okay? Obviously, you want to set that area to TP, but we're going to talk about some scenarios where you might need to TP a bit earlier, okay? Namely at points where there's a high or low in your way, or there's a forming zone that could potentially pose a risk to your trade, okay? And that's going to be using your common sense and everything. You don't want to be stubborn and hold to a TP just because it tells you what it is, okay? Your SL is also going to give you an area where you can place your SL. Same idea as with the TP. The thing is though, with this tool, before we continue, this is the first version, okay? It's going to be, like I said, it's not going to be perfect. But what this is geared more to is for scalpers on the 1 minute time frame for futures, right? Why did I make it geared toward that? Because that's what 90% of people probably in here will trade. You got your options traders, yes, you can still use it for that. You got your forex traders and whatnot, you can still use it for that as well. But what is it? Its intended purpose. It is for me, I use this and I trade personally just in general NQ on the 5 minute and the 1 minute, but with this tool, specifically the 1 minute time frame, because I scalp and my trades are very, very quick. So I'm taking when I'm trading, I'm over here looking for a 1-to-1 quick in and out, and I take my profit, look for the next setup. I'm not in a trade. I'm not like, you know, y'all gonna, for those that aren't familiar with trading, this is probably gonna seem stupid to you, but if you have knowledge about trading, then this will make sense. For me, I'm not this type of trader where I'm going to look for an entry and then, you know, wait, 30 minutes for my TP to get hit, right? But for me, I'm more so a 1-to-1 type of trader, right? Where it's like something like this or whatever the TP will be, right? But I'm over here looking for a quick move. I'm over here looking for a refined entry where I can hit TP quick, move on to my next day, and catch another scalp after that, and after that, and after that, right? That's the type of style I'm on. If you're on that, then this will work well with you as well. If you're not on that type of time frame, on that type of mindset, and that's not your trading style, you can still use this. But we'll go over a different approach of how you can use that, right? Depending on your time frame and whatnot. Instead of scalping and using this as your all-out TP, like I said, it's low right now because we're in a low volume environment. But instead of using this as your TP, you can use this as a TP interval. So let's say you have, instead of a 1-to-1, let's say you want to, let's say you're targeting a low or whatever for shorts, right? Then now you can use the TP interval to say, okay, 3 points will be TP1, TP2, TP3, 3 points here, 6 points, 9 points. I know that's not really what it is, right? But just as an example, for the sake of example, that's why I drew this. That's how you can use this instead, right? From a different point of view, a different mindset, okay? And then below here you have volume. This is more so for continuation based trading. So if you see, continuation meaning you're not trying to catch a reversal, right? You're more so trying to continue to scalp, trades when we're trending up, or scalp trades trending down, right? Looking for a continuation. This is pulling volume from 3 separate time frames, and it's in 3 rows. So how you can visualize this is, one row is so these are for closed candles, okay? So you see how this candle's still forming right now? There's no data for this candle yet, and for this close on this time frame. All right. So this particular is this a row or is this a row? This is a column and this is a row, right? I think I'm stupid, low-key. I'm kind of slow, but I believe this is a column and this is a row. So for this column right here, right, you have 3 separate volume bars. That's going to be for the previous candle close, okay? And obviously it's color coded, right? But you get the idea. So this column right here is for the bar behind that. This one that just popped in right here is for the previous close behind that, and so on and so forth. So how you can use this is if there's green volume, bullish volume, in agreement on all three rows, right? And you're in a continuation based, model. You're trying to trade a continuation. You can use this as confluence or agreement that, okay, if I were to take an entry on, whatever candle close you want to take an entry on, and it closes a candle where there's bullish volume agreeing on all three time frames, right? That is aggregated here. Then okay, that's a signal that you have higher confidence in that candle close to continue higher for the next move up. Okay, like I said, this is more so for continuation based trading. For this tool, before I continue, are you going to be using every single factor together? You can. Do I do it? No, I don't. I isolate specific factors in this, mixed with just my analyzation of price action and how I normally trade to make my own approach to the market, right? I wanted to make my approach on the market into a whole tool. That's why I made this, right? But I also wanted to add a few additional factors as well for people who have different styles, like continuation-based trading, stuff like that, people who need a little help with setting their take profit and all that, okay? So that covers our dashboard. Now, our other two factors are our larger zones here and then our smaller zones, as you can see here. Okay, now aesthetically, like I said, I know it doesn't look amazing, right? But this is the first version. If anybody that got aesthetic suggestions can let me know anytime, and then I can adjust that, right? But this is good enough for me. But zooming out, you have these larger zones. Now that this may look like, okay, well, you got a however 1,000-point range here that's green, right? But what this is going to help you do is this is going to help you zero in from the bigger picture to the smaller picture. Okay, now this isn't the best example because we're aftermarket with low volume, but we can go to an environment like today, towards middle of the market, where we can see a clearer picture in the market. Okay, we could see, okay, now you can see price has opened up pretty nicely here. Okay, you see that you have space for the market to move as it needs to, but this is where the other two factors can come in. The larger zones are going to tell you areas where there's strong buying action and previous price action, right? A supply and demand type of approach. But for me, like I said, I'm going to go over how I use this. You can use this however you see fit, but for me, how I intend to use this is to know more so where I shouldn't be taking a trade. So if we down here, if we trading within this range, I know that I'm not going to be taking shorts anywhere in this range. I know that I'm going to be taking, if I see a proper setup, I'm going to be taking longs as long as we in this green area. Okay, the brighter an area is, the stronger that area will be. Okay, so if we trade in here, right, you can still get bounces, stuff like that, my great artistic skills. But if we start trading down here, right, where we get to this brighter area, that doesn't mean we're going to automatically get a bounce, right? We could still fall through if price action is strong enough, if sellers are strong enough. But that just gives you higher confidence. Like, let's say you already have an entry because of a key level here from your own strategy, your own confluence, and we still come here and we form a bottom, we form a base and price action, whatever your strategy may be, right? This area, right? These brighter areas are just telling you that it's a stronger area for longs to be potentially taken. Okay, for me, like I said, I use these areas to more so caution myself to know that I shouldn't be taking shorts here. If I am taking a position in this area, it'll be longs. Vice versa for shorts. I know that I'm not taking longs in this area. I'm only taking shorts in this area. All right. Now, the second factor are these zones, as you can see right here. Like I said, my approach to the market that I wanted to inculcate into this is a broader perspective, zeroing into the more specific perspective into price action as you zoom in. Okay, so these zones are obviously pulling from areas where there's high probability for orders to be left behind, right? It's you can call it an order block if you want, or supply and demand, but it's not this like how order blocks and supply and demand are typically drawn out. It's not. It's different. There's a twist. But these are basically going to give you areas that are going to be, like I said, good probability for entries to be taken. You could use these for entry zones. Now, does that mean, like I said, to, you touch it and then you take shorts automatically just because you feel like it? No. Like I said, I'm going to talk about how I use it, but for me, what I'm doing is I'm looking at price action, how we react to the zone. If I see a setup in price action that's giving me an idea that sellers are strong, that we can't seem, we're failing to make a new high, right? Then I'm taking a short and I'm targeting whatever TP or whatever level that I can scalp, right? So just as a caution, you can, if you, like I said, you can back test this. You can play with, you can do whatever you want with this, right? But how I would play and how I play the market in general, is heavily based on price action, right? You can't. If I wanted to, I wish I could put into this indicator and tool, I wanted to. That was the original idea, was to put into like entry candles, like an icon over it to be like, okay, this is a good place to short. But for two reasons, I didn't do that. One, it's extremely hard to do that based off of price action, like extremely hard. It'd probably take me like 2-3 years to try to do. And for two, even if I did do that, I did attempt it. Like I said, it's very hard to do. And with that type of skill with price action, that's only something that you can really develop yourself, right? That's why I say this is not supposed to be used as like the holy grail. You got to know how the market works, right? That's what this tool is based off of, how the market moves. And if you can mix in and develop the skill of reading and deciphering price action, coupling the two together is going to be golden. Okay, that's what I do. I've traded price action for the longest the longest time. I've always had price action as part of my strategy since I actually, I would say when I first started trading, I was really indicator reliant. Actually, I would use like MACD and all that, and I would just, I would be too reliant on it. That's why I'm cautioning y'all to say, although this indicator is based off of the market fundamentals, I don't want y'all to rely on this. Okay, I want y'all to use this as secondary confluence. So, like I said, these zones can be used as potential entry areas to short or to long. There's no longs popping up here, but they will as I go through the day. But yeah, like I said, I'll go fully through how I would use this, but that's just basically detailing all the main and major factors of this indicator. The last part that I'll go over is the volume values. As you can see here, it's going to be giving you a number. I'm still trying to refine this. This is the best I could get it, working with the developers, but basically the higher the number, obviously the stronger the zone is. What I've noticed with using this and backtesting it, if you're trying to take a play solely based off of the number, which I don't do, but it's something I'm aware of. But I'm not predominantly looking at the number. I'm just looking at, like I said, if it's a zone, if it's a valid zone, and I'm looking at price action, and there's a valid setup, I'm gonna take it. But I'm not really looking at this number value predominantly. But it's something that I'm aware of. But if there is something that you really want to be aware of with these numbers, is that triple digit numbers and above, right, are going to be really strong. So like 206, right? 168, 175, stuff like that. Those zones, those areas are going to be strong, right? In comparison to double digits. Those triple digits are going to be on something to watch out for, okay? Okay, now, that's, like I said, that's going over just the main factors of it. Now I'm going to go over how I would use it. So I kind of already just explained that, but like I said, what I'm looking for are for a few things. So we'll just go over today. Like, me might as well, because y'all probably traded today. Y'all know what happened today. We might as well go over what happened today. So I'm just gonna replay this. As I did not memorize where these zones was. Like I said, I do remember I took trades. That's why I'm going to show them. But like I said, today was actually a very good day for it to debut, because the zones were accurate as I don't know what. Like, it was insanely accurate, and you're about to see. Now, Is today's performance of the market maker going to be every single day? No. In fact, like last week in CPI, all the bullish zones for CPI, they got blown through. But that's kind of an outlier because CPI is a high impact news day, and y'all know how price action gets with that. So don't fight the trend with on CPI. But that was a day where it just shit the bed, right? Because there's such high volume, and obviously those bullish areas, those bullish zones aren't going to hold up as well on the compared to a normal day like today. Okay, so today's performance was extremely good for it, but I don't want y'all to see this, and I'm not about to sit here and lie to y'all and be like, this is every day, buy the indicator. No, I'm going to keep it real with y'all. Okay, it's not going to happen every day, right? But today is an example of good fluid price action where levels were being respected, and you can get good high confidence entries. All right, so starting out on market open, the best way I can explain this is just going through replay mode. So we're killing two birds at one stone. The best way I can explain how I would use this is just seeing when a setup pops up. So right here, immediately, we saw this zone, this first zone gets it's untested. Okay. Now for me, like I said, there's a lot of factors within this. I do not use the volume unless I'm playing a continuation. Okay, so for this example, we'd be playing a reversal if we are taking a play off the zone. But for, like I said, volume, I'm only looking at for a continuation play, so I'm not looking at that majority of the time. Like I said, unless it's a continuation. From the dashboard, I'm using the TP and SL. Sometimes I'll use the flow, but it's not mandatory for me to be in a setup. Like I said, all of these are included. If I were to like visualize how I would, within the settings, I don't really use this every single time. So to kind of clear it up, if I'm not looking at continuation and just looking at reversal areas, right, then I would just my chart would probably look something like this whenever it loads, right? But oh, somebody's I don't know what that sound was. But anyways, so that's how I would do it. Now, moving on. We get the zone first, the first one that's tested. Now, remember what we talked about. Triple digit zones are very strong. So immediately looking at this, you can look to short. And like I said, I'm going to keep it 100% real with y'all. Did I short this or did I see a setup? No, I did not. Even though this would have worked insanely well, right? We tap this to the tick, right? We go above it like one tick, right? And there's also a 50% mark. If you're that type of person that likes taking stuff at the 50% line, you have that option as well. But this first tap, immediate rejection, okay? Remember, triple digit zone, it was already strong. You could have, if you wanted, let's say you wanted to take this play, like I said, this isn't valid for me, and I would not take this play myself, but your TP, your SL, normal, right? Right there, that's what it would look like, right? Your first dub of the day. But I'm not going to include that because even though that's a great win, that's not something I would have taken. But something that potentially you could take. If this is the type of play that you see, that you like taking first taps of, go ahead. Moving on. We continue forward. This is also something I wanted to cover. These zones that you see right here are areas that are in progress of being formed. So they're not confirmed yet. Whenever I see this, I still respect them if I need to get out of a play. Like let's say I'm in a play for longs, or let's say for whatever reason I take longs here, and I see this, even though my TP might be up here, I'm TPing as soon as we touch this zone. Why? Because this is a zone, although it's not confirmed yet, I'm still respecting it. But it's not confirmed, and it's not confirmed yet, so I don't respect it enough to take an entry off of it, but I do respect it enough to take an exit. Hopefully that makes sense, what I just explained. But like I said, just wanted to explain those gray areas, what that means. And so you have another one here, blah, 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 blah. 3 former ones, and then we finally get that confirmation as we dip down into this. So this is an area where you can potentially look for longs. Like I said, anytime you touch a zone, this is where you can be on a lookout for shorts maybe up here or longs up here, right? Now we're aligning both with being in our larger demand area, or more so range, right? Supply and demand is different, it's a little bit more specific. So for these are more so ranges. So if you're looking at this bullish range, and then you also see something like this, right? For me, now I'm looking at potential longs here, okay? Now, like I said, we were confirmed as we dipped into this. So prior to this, despite maybe there might be a bullish candle up in here, this was not confirmed prior to this candle. So now, from this candle forward, is a potential to look for longs. So right here, this is a good sign. Why? We had strong selling momentum into a confirmed zone, and we failed. This is where price action comes in. Like I said, you can't just rely on this indicator just to save your life, okay? You have to, if you can develop the skill of being able to read price action, this is where it's going to combine with this and be golden for you, okay? So for this would be a valid setup for me. Why? Because we had strong selling into a confirmed zone. We also were within this buying range here. But the next candle, we failed to break this low, and we formed a reversal doji here, okay? So for me, what I'm going to do, I'll take a stab at longs here, right? We have our SL at 10 points, right? And my TP at 10 points. Now, if you're scalping, your all-out TP will be at 10 points. But let's say you like taking longer plays, or maybe you want to set your stop larger and maybe target near high, right? Whatever you want to do. You can do, 10-point increments. You could do, I'm just going to round because I don't feel like counting every single tick, but something like this, right? If you're the type of trader that likes having multiple TPs, then you could structure your trade like this. Am I that type of person? No, I am not. I am a scalper. So just because I don't do this doesn't mean you can't do this. You can feel free to do this if you want. But for me, this is predominantly intended to be used for scalping. So like I said, I'm scalping my all-out TP, 10 points. Let's see if this hits. And our next candle, as you can see, using price action along with the zone, you got a nice play off of this. Okay. Moving forward, one thing that I do want to note is that once a valid play forms in a zone, I am no longer looking to take a play in this area. So if we were to come back and dip down, I could not care less. Does that mean that y'all need to do the same thing too? No, y'all are going to see examples of we just kept bouncing. I think it was this zone or one of these zones from the morning were respected majority of the day, right? Maybe it was a later one. I don't remember. But one of the y'all about to see. I'll bring it up later on. But does that mean that you shouldn't use these again? You can if you want, but just generally thinking about how the market works, the first test of a new zone or the first valid move from a new zone is the strongest, right? So as you continue testing a level, the more it gets tested, the weaker it gets. Okay, so just keep that in mind. So that's a rule that I have. So we continue on. Once again, like I said, I'm not looking for another play from this area, but you could just keep an eye on how price continues to react to zones, right here. Like I said, you could have maybe scalped something here, but once again, the first valid play, if I see that happening, I'm not looking to take another play from that same zone. Okay, so we continue, we break, we mitigate both of those zones, that bigger range and that entry zone. We continue. Once again, there's really nothing coming up here. Now, you see this, right? This is where it's important that you need to be like, if you are looking to use this. I tried like adjusting this, and there's really no way, like without sacrificing the accuracy of the zones, there's really no way to change this. But you'll have a scenario like this where you'll test, but as you can see, like as we tested the zone, it was still an indecision, right? A zone, an area of indecision. So this wasn't confirmed yet. So although this candle was bearish on this test, and if this was confirmed, this could have been a good play. As you can see, this zone was not confirmed until the open of this candle, as you can see. So I don't want y'all to be like fooled by something like this, right? Just keep that in mind. So that's why the way to kind of, now you might be asking yourself, well, does that count as a valid move back down from that zone? For me, no, it does not, because it was not confirmed when we touched this. So for me, what I do is I will go back into replay mode to see when this happened, if the zone was confirmed. Yes, that's a lot, that's more work, blah 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 blah. But like I said, I played around with changing this to like when they confirmed, And if I was to try to change it, it would sacrifice the accuracy of the zone, basically. Because sometimes it would confirm too early, and then they wouldn't play out as well, right? So it's better to be safe than sorry. But anyways, so that obviously was not a valid play. We continue on. We continue on. Continue on. Indecisive zones. Now we have a new area, right? Now we're potentially looking for longs, right? Now for here, I'm not really seeing anything so far. Yeah. So you could have potentially taken like bullish consolidation the way you play price action, but for me, there wasn't a strong enough bullish candle here for me to really want to go long. Continue on forward. Okay, now we test this this bearish area. Now, as you can see, if you wanted to take the first tap, right, you could have taken that and hit TP, right? There was 67, yeah. So you hit TP, right? It's past that 10-point mark, and then some more. So now we have a new zone that okay, maybe you can look for longs here. I don't see an entry, but you can still see it played out. I don't like that. That would have played out anyway, so if you did take this would have played out again, and then the bounce off here would have played out again. So some more potential plays. But like I said, for me, I'm very specific and picky with my entries. So like I said, the last valid entry was here, even though there was a lot of potential valid entries here for maybe y'all. Like I said, I'm going over how I use this, so I'm very picky. I'm sorry. And then okay, so this is I like this. So have I taken a play, or was there a valid play from this? No, not yet. So for me here, I'm a look for a short. Now, like I said, this is technically the third test, but we weren't confirmed until after this. So this is technically, or sorry, that was the fourth test. So that after this was the third test. Now, for me, like I said, you can still use the one tap rule, but like I said, for me, I use it as was there a valid play for me to take from the zone? And if there was, like for example, if I took shorts here already, whether I stopped out or took profit, if I already took shorts here, right, then I wouldn't take this, right? But because there wasn't a valid play for me, I'm going to take this, and we'll see if we stop out. And as you can see, we scalped this to hit TP nicely, okay? Right back into this bullish zone, okay? Hopefully y'all are starting to get this. And the reasoning, like I said, I explained the reasoning for this one. I don't think I explained it for this one, but the reason why was, so we tapped into this bullish zone, right? We had a strong bullish candle after we failed to reject. We made a new high, right? We tested here again. We got selling from this previous high. We broke back above this high, which is an indication that sellers are strong. I mean, that buyers were trying to push price. But we came into this high here, and we rejected nicely with a strong bullish body, a minimal, strong bearish body, a minimal buying wick, and a notable selling wick. So for me, this is a good setup. Using price action and the zone together, this is a good setup. So I would go short, and as you can see, it played out. Now moving on. So this would be a zone that you wouldn't take. Why? Because you have this buying range all up in your way. Okay, so this I wouldn't take because there's no space. We continue. Okay, now we get a selling zone right here. We get strong bullish displacement into the zone. We start to get momentum falling off, so you could look for shorts here. You get a doji. That wasn't an A+ setup for me, to be honest with y'all, but as you can see, it still played out. So I'm not going to count that, even though that was a win. I'm not going to count that, but you can see it played out nicely. Moving on. Forming zones. And as you can see, notice how in the meantime, we're still bouncing off this bullish range, right? Don't sleep on that. Keep an eye on that as well. Now it's not going to hold up forever, as you can see, but now we're rejecting off this bearish level. Continue on. I'm not seeing anything. Obviously, no zones to take any trade off of. And I'll just go through the entirety of today, so I don't keep y'all here forever. Obviously, this zone was intertwined with this bullish range, so this is obviously it's not in agreement. Still played out, but it's not a valid setup for me. Another bearish zone, but it's within this bullish area, so once again, no good setup. Still played out though. Now we broke. Now you can see volume will open up, right? We finally broke. Now we have space for price to move. We bounced nicely off this new zone. And now, okay, now we can look for a potential short. So we come in to tap this area. I mean, once again, a nice scalp win. I'm not gonna count that for me because I wouldn't have taken that, obviously. So far we have, for me, like I said, I'm very picky. I only have 2 setups, and you went 2 for 2 2 wins. But as you can see, there's a lot more setups that y'all could have potentially taken if you have a different approach to the market. Test again, we reject. Form a new area, we reject. Again, y'all can see zones was hitting today. Zones was definitely hitting today. Now we tap this area. Now I do like this. This initial bounce, right? It's not enough for me to want to take longs, but I'm gonna see how we treat this. So, I need something better than that. Okay, I'd go long here. So TP, so SL at 10. I'm scalping this for a 1-to-1. 10 points. Why? Strong selling, obviously, into a zone. This is the first touch as well. We could not push lower, right? Couldn't make a new low. We tried to push up. Got in our next candle, which we're looking to enter on. We had a nice bullish wick. We're failing to make new lows. So for me, I mean, this is not the greatest setup in the world, but as you can see, nice displacement up. And you hit T. This is why I say my scalps are very, very quick, because as you can see, this is like a 1-minute trade, if even. This could have been like 10 seconds based off of this 1-minute candle. But that brings us to 3 for 3. Okay, moving on. We tap this zone. Now you obviously have this one in the way, so I'm not really looking for anything because you have this forming zone in the way. Remember, we want to respect that still. Still in the way. So that sucks. Okay, so this would be a good setup if we didn't have this zone in the way. So I would go short here. As you can see, you probably can see why. Momentum falls off on these bullish candles. Strong selling wick. Couldn't make a new high. Strong selling body. Minimal buying wick. So it hits, as you can see. But unfortunately, that zone was in the way, so that's not a valid trade for me. But as you can see, that hits. Moving on. Continue. We test it again. No valid setup there. No valid setup there. There's really no slow momentum. We're just pushing through. We break through. We tap this area, as you can see. Strong displacement up, but we had these zones in the way, so nothing valid there. We still get a higher push. Forming zones, we tap again. Break through it. Now, yeah, it doesn't form. That would be a good setup potentially. I like this. I do like this, but I'd probably need to see another low be made. if we can hold this. Okay, so we don't hold this low. If we can hold this, oh, never mind. I was gonna say we could potentially take another play, but we already took a valid play. Remember, if you take a valid play off of a zone, then it's not valid, or the second test is not valid. So you can see you still, once again, the zone holds up very nicely. Okay, yeah, I don't like that. Still strong displacement. You test this zone. I thought that was going to close bearish. We didn't. Close here. Okay, so I like this. So we failed to make this new high. We get buying into the zone here. There's no, obviously we haven't taken a play off this yet. We failed to make a new high. We tap this high, reject. Strong selling wick, strong selling body. Minimal buying body, so I'll take a stab going short here. Hopefully this is all making sense to y'all though, because, and once again, so strong displacement. Volume came in right off this high, this rejection candle. Once again, another quick trade. But once again, like I said, notice how strong these zones really are, right? So like I said, these levels are that you can really, like, if you pair them with price action, they can make for something strong. So we test this level again. Unfortunately, I'm not looking for anything because we already took a play, but what a surprise, we bounce off it again. So we come into this new area. I don't really see a setup. But we bounce regardless, as you can see. We tap this zone again and reject, but there's no valid setups for me here. So you can see there's a lot of setups that hit that I just didn't take because I'm picky. But in total, so far, for me, there was 1, 2, 3, 4 scalps. Okay, and 4 for 4. That could have been a short, but okay. So this is the only trade. So this is the only trade I actually remember because this trade was the one that got me to a big milestone. I won't go too deep into that, but people who got the alert in my channel know. But this is a good short setup. I'm gonna remember this trade for like the rest of my life because this got me to a big goal. But this short right here, valid. Strong buying into the zone that got stiff armed immediately into this candle. Failed to make a new high. Play the rejection. So the entry could have been here. You could have played it. I won't count it though because that's the only trade I actually remember, like off the top of my head for today. But so I won't count that. But the rest of them, these are all valid. That's valid too, but you know, y'all get the idea. And then the market closes. All right, I know that was long. I know some of y'all fell asleep. I'm sorry, but y'all can just see, just off of an example of today, that you know these areas they nothing to play. They're nothing to play with. You know, they're something that you compare with your confluence, with your strategy right now, and it can work. You could do a lot with it. Like I said, it may seem like a lot within it, but I didn't. Although I wanted to put my personal trading, like my personal approach into a tool, I didn't want to be like one size fits all and force y'all to like abide by that. So although I'm showing y'all exactly how I would use it, right? I'm showing y'all exactly my thought process and trades that I've actually taken right today with it. Like yesterday, it's already 10 at night on the East Coast right now, but yesterday it was like 6 for 7, right, on valid setups, right? Today, as you can see, on valid setups, it was 4 for 4, right? And don't even get me started. These were on scalps. Excuse me. Now I be selling myself short sometimes by scalping 1-to-1s, but let's just evaluate just how long this move was. Set 67 points, 64 points, That 155, like you feel me? Like I'm obviously scalping for 1-to-1s, right? Because I like to be in and out of the trades. You know, I get in with, you know, I use the same amount of contracts every time. And at this point, when you're using 1-to-1 type of plays, you're really only worrying about your win rate at that point, right? And trying to keep it in tip-top shape. If you're trying to be profitable, you just need a 51% or higher win rate, right? Obviously, you want to aim as high as possible, and that's what I like to do. This one reached highs, you know, 37 points, right? But obviously, all those realistic. Are you going to hold 155 points, your full position? No. But I'm just showing y'all the gravity of how, you know, these moves that you can play with are for people who like to hold for multiple TPs. Okay. So this is a very, very, very powerful tool. Okay. This is, like I said, it's not something that you need to be profitable. It's not something that you need to you know, be your holy grail, but it's very, very strong, and it took me a long time to make because I wanted it to be perfect. Next up, we got our live trading example of me using this exact strategy with the market maker. All right, I'm looking at shorts. I'm entering short here. Getting closer to TP1. All right, there's TP1. Second TP, 53.25. There's TP2. TP3 for 30 points is almost hit. All right, TP3, guys. TP3 is almost hit for 50 points. There we go. TP3. I'm sorry, TP4 for 50 points. Sorry.
Goddamn Kago?
Next up, we got Tony talking about his scalping strategy using the market maker, his approach to risk management, and his insane crypto strategy.
Okay, so this is basically how I use the market maker in terms of applying it to different indices and stocks. I specifically use NQ. It's not because it doesn't work with other stocks and indices. It's just, this is what I prefer, and it's what majority of the limitless gang also trades. So this is what I go for. But the process that I use is pretty straightforward. The one thing to mention is to always check news. And I use Forex Factory mainly just to see what's coming up. Just because even though these zones are strong, news is just a different beast. It'll manipulate the charts like crazy. And not even these zones will be a viable option for trying to trade through news. So just be mindful of that. And other than that, it is a pretty straightforward process. So let me see here. I can go back some time just to show you guys good examples. I also chose out some options to show you guys different tips and tricks on why I don't use the market maker in certain situations and why you guys shouldn't either. Let me go ahead and replay that for you guys. And I primarily trade using the 1 minute time frame. And this first example is going to be a good reason as to why I don't use a hard stop loss. And what I mean by that is I don't mean don't have a stop loss overall, but that is just more of a loose stop loss and a fluid stop loss using price action to determine whether or not I can get in or out of a trade. And the reason that is I'll demonstrate it here. See, this is still a good example. This isn't the exact example of why not to use a stop loss, but we'll see right now. Let's see here. So you can see we have a couple forming zones. We'll kind of lower that speed to where there's 2 zones here. And then you can see this zone was confirmed here. And I would generally use this one as its first entry in, maybe this one even as a second. Okay, ideally I would like to see something like that, right? So it came in, you saw that it tapped in, rejected. What I'll wait for is another push out and then a re-entry into this zone. And I'll kind of type that out here for you guys as well, for you guys to screenshot that. Okay, so what I do is I wait for a zone to be confirmed. And a good example is this specific reason here. Let's see here. So I'll wait for zone to be confirmed, and then I'll wait for initial tap in to the zone, and then I'll wait for a second tap into that specific zone and a rejection. And that's where you'll set your entry. And generally speaking with NQ, you can kind of use the measuring tool to see the different moves, but you can see here that generally speaking, it'll make 10-point moves, 10 to 20-point moves on NQ. So I prefer to have a stop loss and take profit with 40 ticks or 10 points. And here you saw the initial entry. This candle I would have considered to be that second entry into the zone and a rejection. So I would have gone ahead and tried to take some longs here. enter here onto that close of the candle, and I'll set my take profit at 10. So you'll get on that zone right there, on that entry of the close of that candle. You'll see here that this was a good example, I guess, as to why you shouldn't have a stop loss. So you can see that it would have hit my 10-point stop loss, and then almost instantly it goes towards my take profit. And that just, it's insane to me. And the fact that that would have been money missed out on. I generally have a risk of 200. I either win 200 or lose 200. And in this case, if I would have had a hard stop loss, it would have taken me out as soon as, and then instantly after it hit my take profit. So that's a good example as to why I wouldn't use a hard stop loss. Again, that doesn't mean to not have a stop loss overall. You should be able to recognize your risk. And if you see that you're in drawdown a substantial amount that would equate to your take profit, and you don't see a rejecting candle, get out of the trade. You know what I mean? So another good point that somebody brought up to me without using a stop loss is sometimes you'll encounter super huge candles that'll make a 25, 30-point drop. And that's a good precaution to have and something to keep in mind. So what you could also do there is have a super loose stop loss, like 15 points or something. That's just to keep you more safe on that end, and then still be able to hit take profit there. So that's generally what I do. This is a perfect example as to why no stop loss. Good example of what I would deem a good entry using these zones. And it's just beautiful. It was a beautiful entry. It would have been in and out of that trade in less than a minute. And that's $200 right there, whatever your risk is. So let's see here. I also wanted to bring up an example of why you shouldn't enter when there's a zone that's less than 10 points away from the zone you're using to enter on. So you do have a good zone here. That would have been its first tap in. So we're basically eyeing this one for longs and trying to use a 10-point take profit for that. Let's see how far this forming zone is. Okay, that's pretty good. Let's see here. Okay. All right, yeah, so this one would have played out, but if you try to catch a second entry onto something that already played out here, played out beautifully. First tap in, second tap in, 10-point take profit. Would that have hit? Let's see here. Probably would have gone in somewhere here. Yeah, most likely would have hit there. Okay, but you can also catch another entry into the same zone for a third tap in. It does tend to be riskier, and I wouldn't recommend it. But if you try doing that here and try to getting in on that with a forming zone in the way, that's, let's see here, it's 9.25 points away from your initial entry zone. And this is a good example. So it would have tapped in here. You would have most likely tried to get a fill for a long because you saw this rejection candle. And then you want a 10-point take profit. And then playing out here, it would have hit your stop loss. And yeah, you could have used some price action there. But if you were using a hard stop loss, it would have been a good example as to why. These forming zones, I believe, hold a lot of power. So if you're using them to make money and you do believe in them, it just wouldn't make sense to enter into a trade that has another conflicting zone that you would have used as another entry to make some money. It's common sense to not get in when there's a forming zone or a conform zone relatively close to your entry. And this, it would have played out in your favor to some degree if you were super precise and clean with it, but it's just another reason to be careful and utilize this tool correctly so you don't lose money on that. Let's see here. Okay, perfect. Okay, this is another example of using the NAS on NQ. So you can see here, there's a zone that formed out. You get an initial tap. Again, my strategy here is using an initial tap to kind of confirm that zone and entering off of a second. And with this zone already being disrespected, or not disrespected, but utilized a couple times here, I wouldn't regard it too much. And I could form an entry off of that. See here, and let's see how far it is as well. And with it being almost 20 points away, it is a pretty good time to get in as well. Let's see here. And this is another good example of not using a hard stop loss, or at least a loose stop loss. So we'll see how this plays out here. So you see, made that tap in, still no entry out of the zone. I would have used this push up as that confirmation to try to find an entry there. And with it, let's see, if you would have tried to get in here. Okay, so this one would have played out. Yeah, that played out. It was a pretty rough trade, but generally speaking, I'll use that second entry when you see a push out and then a re-entry into that zone, which happened with this candle here. It played out with that 10 points for take profit and then a stop loss. So yeah, the other examples I had were just good reasons why not to use a hard stop loss and use a looser stop loss on that. But that is pretty much how I use this tool to make money on NQ. And then I also use it on Bitcoin. I was just playing around with it when the markets were closed. So let's go ahead and show you guys how to get an entry on Bitcoin as well. Let's see here. I had some good times to show you guys. Let's see if we can find something good. There's movements happening right now, so that's why I have this alert here. We would have gotten into some shorts here, but it didn't tap into that zone. So I'm just waiting for it to get tapped into and then waiting for my play out. Let's see here. So you can use the hourly time frame on crypto, and specifically I would prefer to use the market maker on something that's heavily manipulated and uses the same concept as other manipulated markets like the S&P or NASDAQ. So that's why I prefer to use this method on Bitcoin and Ethereum, because those are also super manipulated markets already with how much money is inflowing through those markets. So let's see here. I wait for an initial tap into a zone, and then you wait for a break of structure, and then you wait for price action to go into an order block. That was before that break of structure. And then you just enter off that. I think it's a pretty straightforward process. What I've seen also play out on the hourly with these zones is you can get a second entry onto a zone, and that's when I would consider that zone fully used out. And with that second entry onto that same zone, you would just wait for that tap in and then a break of structure. It most likely won't re-enter into an order block. It'll just make its whole move down. And also keep in mind that your take profit and stop loss are different with these two entries. With these, you'll use a conflicting or contrary zone to what you entered off of as your take profit, the beginnings. And then for this, you'll use prominent highs and lows for your take profits and stop losses. Let's see here, but we can go over to the hourly time frame. I wrote down that this was a pretty good day to show how it plays out. So you can see here, zone was formed here based off of this candle here. This is the first tap into that zone. What I like to do is I like to put in a, what is this even called, array here to get in and kind of go to lower time frames to be able to see where these zones are. I'll go down to the 5-minute time frame. I'll see where it tapped in, and I'll see, oh shoot, let's see here. I'll see where that break of structure is at. And what I consider to be a break of structure is when a higher low is formed with two candles here. So I wouldn't have considered, this would be the low here, and this would be the initial end of that low with that high formed here. I don't know if that's a good explanation, but you guys can kind of see that there. This is a low, wouldn't be considered a low without a high next to it or a push up. So now this is the low here. We're waiting for a break of that. You can see here that this candle made that break. This candle tried, didn't confirm it, wouldn't have gone in, would have tried to see something here. And then you can see the order block formed prior to that break of structure would be right here. And then you can even see that the market maker kind of made that a good zone as well. And I would wait for a tap in. See here, let it play out. Pretty sure it taps into here. Okay, perfect. You would have seen here, taps into that order block. It would be a prime time to get into some shorts. Most likely would have gone filled somewhere here. And then we can zoom out to the hourly. Let's see here. And you could use the end of the zone, but generally with Bitcoin, and like how I mentioned, it is pretty manipulated. I'd most likely try to have these highs and lows here, or these highs here as my stop loss, just to avoid getting stopped out too early. And then here you do see there are some conflicting zones here that you would try to use as take profits here. You could have either gone out here or based out all the way down here at this other hourly zone. even here. You could have set this up to be multiple take profits. And with the calculations that I've done, I use Blowfin as the, what is it even called, a brokerage firm for trading futures for Bitcoin. I just think it's super clean, super nice. The commissions are ass, so I will mention that, but it's just pretty good, and that's what I use. So let's see here. Yeah, I would have set this as my stop loss here. Use this as my take profits or full out exit. And with that calculations, I've estimated that around 1% moves here generally tend to be a 42 to 45% gain on your position. So you could have seen here, you could have either chose to make this your initial take profit, which also would be good, as there's another forming zone here, but this candle here invalidates that zone. So we could have played it out here and set this as your take profit, and then we'll see how it plays out. And it almost touched your take profit, doesn't, and then it does here a couple hours later. And with a 3.66%, let me do some calculations here. 3.66 times, we'll be conservative with the estimations there. This would have been 153% gain on your position. And I just think it's insane. You can see there's a couple other zones here that are forming. This one played out as well, so relative. You might have, let's see here. I think it did play out. But yeah, it's a pretty good, like it tapped in a couple of times, so you wouldn't have used it. But that's how I would use the market maker hourly time frame, wait for a break of structure on that 5 minute, and then a re-entry onto that order block with the initial tap. And then if you're going off of a second move, you would use simply a break of structure and target prominent highs and lows as your stop loss and take profit. So that's a pretty good move here. 150% gain in a single day is just absurd. And that's the power of using the market maker.
Next up, we got Kelvvo sharing with us his scalping strategy and how he's able to hold day trades longer for multiple take profit levels.
All right, so going based over my trading, strategy using Chicago's market maker indicator, pretty much, I'm gonna be honest, the best tool alive. Let's put it that way. I got a couple of rules in terms of my trading style and the way how I trade using this indicator. So basically, as you can see right here, just going really briefly through it. Before taking a trade, or even think about taking a trade in the morning, what I would do probably at 9 o'clock in the morning, or 9 to 9:10. I'm looking at pretty much the 4-hour momentum and the 1-hour momentum, as well as the 1-hour specific key levels. Now, doing a little bit of back testing with this indicator, right? We're gonna first look at the 4-hour really quick, and what I'm trying to find on the 4-hour, right? What I'm looking at is where zones are placed. I don't trade off of them personally. I majority look to see, hey, look, if we're in a bullish zone or if we're in a bearish zone, what should I look out for? And as you can see, pretty much over here, you can see how honestly this indicator will mark out those levels for you. If it gets respected, it plays really well, even with the bearish, not the bearish, the bullish areas over here as well. So that's what I'm doing on the 4-hour, is seeing anything as well as me being a price action trader, what the candles are telling me based off the closes and the wicks, and everything like that. If I can also use it as like a key level, basically from this over here, this looks like a really good area where price could possibly reject to possibly go up from the market. So that's just a couple of things that I'll look at on the 4-hour. Any type of candle closes, or any type of bullish or bearish zones that I can use as an extra confluence and reduce the risk of me losing a trade as well. Now going to the 1-hour, I do the same thing on the 1-hour, but what I want to point out is how this indicator actually marks out really, really good key areas. I'm gonna put this bullish level, for example, here. What I will usually do is probably just mark out the middle of the line. But why would I mark out the middle of the line is for a couple reasons. I'm looking at rejections. When I see key levels, I want to see wick rejections, and it gives me an area if that level gets respected or if it gets rejected. Pretty much two different ways, right? So what I really like about just this middle level that's pretty much right here is if we kind of go back, I mean, look at where there's multiple rejections. If I mark this out so you can see what I'm looking at, multiple rejections up here, I know that there's really two things going to happen with this level. It's going to get respected in terms of probably is going to get respected, bounce up a little bit and go back down, or if it's just going to get straight disrespected from any type of selling momentum. Now the only reason why I say that is because they're, you know, top rejections. They're, you know, rejections from sellers and everything like that. If it was the opposite, if there's buyer, you know, rejections, example is like these over here, then I can, you know, flip my buyers from there. But I'm majority, you know, taking a look at the bearish side of everything. So that's what I'm looking at in terms of key levels. And this tool gives me that good idea where it's at. Now, if tool's all the way back here, I'm probably not going to do that. The farthest I will probably go is a couple days behind. And also, I'll probably mark out this area because this is a really good area as well, to just put it right dab in the middle, because it's also in the selling zone as well. So now, kind of going off from same thing with momentum, looking for any type of candle closes based on the 1 hour, any type of like bullish, bearish engulfing, or any type of doji candles from the bottom or from the top, or anything like that to, you know, give me another extra confluence of what can I expect for the momentum to be for the day, and everything like that. Obviously, there's not anything that I can read off of here besides this zone, the selling zone. So there's not much where I'll go from there. And yeah, let me go ahead and find, let me see, finding an entry, finding a play real quick. Okay. So what I was about to mention is, like, if the way how I trade is, if I see if the zone, if like the selling zones and the buying zones are on top of each other, I'm gonna wait for, like, you know, the bottom and the top pre-market range to get broken, or at least something to get out of here. And you know what happened if, like, saying somebody's like, oh gosh, triple digit zone, you know, I'm gonna go ahead and trade off of that. I feel like probably got some people that would just, you know, watch this and then take a short off of here. But of course this one gets disrespected for what I remember for Wednesday, and of course it becomes a losing trade. So the only reason why I know, because I did took that trade. But yeah, I'm not sure that's a good thing to point out, or you have pretty much already pointed that out or anything.
Yeah, no, that's good. Actually, that's probably good to keep in mind for somebody
Okay,
new.
gotcha. Cool. All right. So, so coming back to Wednesday is I kind of took, I think I took one win and one loss. And I'm tell y'all why I took a loss. So basically going based off this, right? One big thing is that we have two zones. Of course, you see multiple levels and zones, but what I'm talking about is a big selling zone around here and a big buying zone around here, which you can add to your confluence as well. Is if something like this happens, you can mark the top of pre-market that's been, you know, involved in this area recently, as well as the bottom of pre-market. So what I would do is mark top of pre-market, bottom of pre-market, basically in this big zone. And what I'm going to wait for is a close, or a big push of momentum away from these two zones in this area. Because one thing that, you know, you want to take cautious of is, I know Chicago takes a lot of pointers of, hey, look, if you see a triple digit zone, that area is set to have a really good big rejection, or not, well, yeah, rejection, or a really good area of entry and everything like that. So let me tell you why. Is because, as you can see here, you may think, hey, look, this would be a good entry and everything like that off of a really big bullish momentum. That is really risky to take. To be honest, I ended up taking this trade because I thought it was going to be really good to just reverse and potentially give me like a scalp type of trade, or, you know, be like a one and done type of trade. Obviously, I was wrong. Of course, this is like almost, give or take, let's see if I bring out this ruler right here. Almost like a, you know, a 15-point loss. I took 10-point SL on this, but as you can see, of course, I got obviously liquidated from that. So keep in mind, you know, when you have two, I think Tony also talks about this, when you have two conflicting zones, be very mindful and be very careful on how you respect that area and that trade as well. This is probably a good area to point out. So another thing is that, and this is me trading on the 3 minute. I do take a look at that 3 minute and a 5 minute now, just basically off of my trading strategy and everything like that. One thing to also keep in mind is that not every trade is going to get respected. It's a good thing to keep in mind as well as mindset and psychology wise. For me, this would have been a really good area, right? We closed above the pre-market range. We're showing a lot of bullish momentum. This is probably a good retest. There's no reason for us to go all the way down until we reach honestly anywhere up here towards this area. Obviously we miss it. So what I feel like is like, hey, look, a little bit of a retest, not gonna hurt. I'll reach back up here and then we're gonna start selling off. Obviously I was took the trade. Took the trade somewhere within up here instead of down here of what I should. So this would be my mistake of going off from these two areas of rejection as well. And I obviously got, let's see, coming from at the top of here, I barely even got towards my first 10 points, and of course this area got killed. So that's one thing to keep in mind. Not every single trade is going to go your way. Now, fast forward to a little bit of another trade I did take, going to being bullish. Now, let me see if I go here on I can see if there's anything that can pop up on the 5 minute as well. All right, so kind of taking a look at the 3 minute and the 5 minute here. So for me, I'm waiting very patiently in terms of finding an A+ setup. What I'm basically trying to find is with the 3 minute, I'm looking to find any type of zone that's going to be formed out, right? So just waiting. Now you could potentially take shorts off of here. For me, that's disrespecting my rules, because what I'm basically trying to look for is following the trend as well as following the momentum of the market. Yes, you could probably take this for a quick scalp, but for me, with this type of market conditions, I'm trying to look for a one and done trade, or hit multiple points or TPs. So coming through here, we've got the selling zone that I also got to look out for. Nothing on the 3 minute forming, being patient with the trade. Now we got something with the 3 minute. Now for me, being really patient and waiting for this trade, I mainly took into account of taking this specific area, even though we're in a bear zone. For me, this is just an A setup. The reason why is because having multiple rejections right here, meaning by that, I'll most likely probably take an entry on the 3 minute anywhere between these areas. So if I took a fill, it's probably going to be between, let's say, 20, meaning towards 22 up here, or 20. So if I'm setting a limit order, that's what I'm trying to that's what I'll basically do. Or if I'm just waiting for price to respect this area, then I'll wait for price to respect this area, everything like that. So as you can see, price did really well of rejecting off of those 3 minute, as well as rejecting off of these areas of rejection as well. And I think this total trade got me about 26 points. Yeah, 26 points. So the reason why I took 26 points was I got filled off of 1920. Of course, a regular 10-point SL. But I also got to take into account this 5 minute zone right here, right? Because it did get pretty much respected. So for me, when I'm taking a look at being a one and done trade, or just taking out multiple trims, I'll probably most likely take 10 points off the first trim off of this, and setting my last TP off of the end of that 5 minute area, which would have been 26 points. Obviously, with me taking this trade, I hit that already, and the reason why is because you never know when the market could obviously just straight kill on you. There's been multiple times where I even took a trade and I was in it for a good minute. It's like 40-50 points into profit, and assuming that maybe one of these areas are going to get disrespected, and just playing an imaginary game like that can kill potential profits as well. So that's another good, thing to point out is when you're playing off of these zones, or taking entries off of 3 minute, watch out for some of these bigger time frames. This is the reason why I look at the 5 minute to see if there's, a selling zone just like this, where I'm like, okay, for me, all I'm gonna do is take a 20-point trade off of here and be done with it. And then, as you can see, areas gets pretty much well respected to the point where, if you keep holding the trade, to potentially get more profits, you can. But, being very mindful and respective of these bigger time frame zones, you have to, or you're pretty much just putting yourself, in a hole at that point. So the reason why I took this specific area right here, because hey, look, we have an indecision zone right here. What makes me become really lenient on this trade is that, hey, look, we rejected off of the selling zone. I'm most likely going to go for a bearish momentum, and coming from a setup like this, I was like, hey, look, this is probably going to be one of my other setups that I take. If this was already a formed bearish zone, that to me is like an A++ setup. It gives me a higher chance and a higher odds of me taking that area. So for me, I think I got filled at, so I did this off of price action to see how price reacted towards this area. I got filled at 18.9, 69.75. As you can see over here, waiting for price to play off of it. As soon as I saw this area of rejection right off the middle, that is when I took it. So for me, I took a total, let's see, I think I took 10 points first TP. Second TP, I did a little bit more riskier of going off of these areas of rejection right here, as well as here. And I think I took a total of 4 TPs on this trade. So with this putting within TP1 for 10 points, TP2 and TP3, obviously that hits pretty much for all of it, and then of course 100 points hit off the area right there. So that's another thing that you can also add to your trading style. But yeah, that's pretty much it, the way I trade, just based off of hourly momentum and simple price action between the 3 and the 5 minute, and sometimes the 1 minute as well if you're playing on scalping.
Now, I know that was a lot, but if you watch this video in its entirety, I promise you are a step closer to profitability. If you want to see the same success and results that Kelvvo and Tony have seen using the market maker, the link is going to be down below. Now, it's a free add-on for all Limitless Plus members inside the Discord, but if you don't want to do that and you just want the tool by itself, then that link is going to take you directly to the market maker to claim it. It's just $20 a month or 64 cents a day. But if you're anything like Tony and Kelvvo, you're going to make that back very, very fast. Tony and Kelvvo aren't the only ones that are benefiting from this tool. If you pause the video right here, you can see the countless amounts of messages that I get every single day from people that are using the market maker and finding so much success with it. They're passing accounts, getting consistent payouts, and starting to find their way to profitability. And this is all I could ask for. I wanted to be the first person to actually make an indicator or tool that utilizes how the market works and gives you accurate and reliable market data. I'm also actively working on version 2 for the tool as well, which is going to elevate it even farther. You're going to be able to see live order flow with buyer and seller control, specific candlestick spotlights which give you higher probability entries, and another addition which tells you where price should be in comparison to where it's at right now. So if you end up taking advantage of this tool and use the market maker, I'll see you on this side of profitability very soon.